this has been a very interesting year in M&A, and I thought it would be great to bring a couple of our team members together with me for a year end to kind of look at the year in review and get their thoughts on what they saw from trends and how we were able to get over the hurdle to get some deals done and things to think about for the future. Hi, everybody. My name's Keithy, President of Osage Advisors. Welcome back to our podcast, The Ins and Out of Selling a Business. I'm happy to have with us and thrilled to have two members of our team, Jim Young, Managing Director at Osage, Philip D., my son. Jim, 5 years?
Going on 6.
Is it really?
Yeah, time flies.
Hey, time flies when you're having fun, right?
Said it.
And my son, Philip, how long you been with us?
Since 2019, but I like to say my entire life I've been working at Osage in the background, so I'm happy to be here too.
He's had the pleasure of being at the kitchen table when I come home from a long night about meeting with clients. So guys, you know, it's interesting because when we started the year, the enthusiasm, excitement about the marketplace was not just from us, but everybody was through the roof. And the only thing that I thought can kind of derail it was some kind of geopolitical event. And what happened? We had chaos, uncertainty around tariffs, no tariffs, where the tariffs going to be, how high are they going to be, cutting them back. So, you know, it's not only pressure on us to pivot, find solutions, but also a lot of stress, anxiety, concern on our client base. So Jim, I'll start with you. You know, again, appreciate everything, your involvement. It's been a lot of conversations. If we record them, we'd be here for, you know, a couple weeks or years talking about things. What are some of the key facts that hit you this year?
Yeah, I mean, obviously you just brought up an interesting point about the tariffs. You know, we signed a client engagement early in the year that manufactures products in China. And, we didn't know that the Trump administration was going to lay very heavy tariffs on those products when we signed that engagement. And so we went to market in the spring, and immediately at Liberation Day, we had to put that deal on hold because we didn't know what was going to happen to the business at our client's request. Right. And then 6 months later, they were able to pass those tariffs on to their customers, and the business has performed incredibly well. So we picked up right where we left off, went back to market. And today, as you know, we have several offers on the table, and we're going through our process. Right. But that was a major disruption that we didn't know how it was going to pan out.
And the interesting thing about that was that our bids were due on that day. And the announcement came out that China is getting 145% tariffs. And we got a call from our client. We all said, let's pull the deal, right? And because no one knows. And you can't value anything when you don't have a complete chaos, uncertainty like that. So to your point, though, he figured it out, right? And we got some good data and historical financials. And so here we are, 6 months delay, right? Deja vu, right? Here we are, same place where we were going to be at. 6 months later, he's got some great offers on the table.
Yeah, but Keith, what's crazy about this is, you know, you're a business owner, you've been running your business for 20, 30, 40 years, whatever it may be, right? And all of a sudden, in the current environment, these geopolitical issues come up, which were unpredictable, right? And now you're ready to retire. You're perhaps in your 70s, and you can't sell your business because of them. Right. You don't know what the market's going to do with that price impact. Now, his product happens to be in very high demand. It's in a marketplace, an industry that's in great demand right now. Right. So it's going to hopefully pan out for him.
True. So, yeah. So in the meantime, Phil, there's like, you know, your perspective. I mean, no one's phone rings more than yours because you're the point person with the buyer community, and there's so much money out there, right? Mm-hmm. And so we're going through this turmoil with no one knows what's going to happen with the economy because of the tariffs and what's going to happen with your sales and your margins, your supply chain. In the meantime, your phone's ringing off the hook.
Yeah, it's ringing off the hook. I'd say right now I'm probably fielding about 20 to 30 phone calls a week regarding potential potential buyers looking for deal flow. So, it's very interesting that everyone's very, very hungry to get a deal done, but it's very uncertain times. So.
Yeah. It's funny because you say because there's so much cash out there, right? And as a huge buildup, and the buyers are looking for a very unique, specific. Mm-hmm. And the first thing is they'll ask is, and they have a zillion questions, right, about our clients prior to when they sign a CA or prior to signing a CA, and you look at it and it's like, is this really the right deal for you? And they're getting pressured from their investors to find deals. Deal flow's down. Middle market deal flow is down 25% this year. I think I read in a recent report. We're in a lower middle market, but still, it's kind of give and take. So, so they're looking for what? They're looking for, you name the industry they're looking for. They list, when you talk to them, they list off 10 industries. I like this industry, I like that industry. Things are coming through, right? So
join the club, just like about 3,200 other private equity funds, telling me every week, what they're looking for. But when it comes time to put, pen to paper, a lot of them will shy away because of the uncertainty of the market.
Which brings up an interesting point because, and the number of books, so we run a process, Osage, we run a full process like the big banks do. And so our goal is to find multiple buyers and choose from them to have a seat at the table so it's the right fit for our client can move forward. So people are asking for the materials. Once we go to market, you're getting unprecedented levels of interest.
Yeah, that's what I'd say. So for every deal that we do, we go out to our private equity database, which is about 3,500. And then we create a customized strategic buyer list, which is about 200 to 500 strategic buyers, in and around the same industry. And I'd say on average, per deal this year, I'm putting out between 100 to 150, SIMs, books on the business, which is an overwhelming amount of interest. I'd probably say, the highest amount of SIMs I put out this year for a deal was 300, which was for a deal that's in the data center space. And then, the lowest amount was probably just over 100. So the amount of buyers that are looking for deals is, through the roof, even though the market right now is, it's very uncertain and there's a lot going on.
So we have a lot of buyers, right? And then you look at look at the makeup of our client, right? When we call it, for lack of a better word, there's the silver tsunami. I mean, our clients have been through the war, right? They've been through the Great Recession. They came through. They had to build their business back up. They said, hey, markets were like frothy in like 2019, right? The interest rates were low. Valuations were through the roof. I mean, you're looking at 3% money then versus you can't find money now for debt financing. The banks are just not looking at lower middle market deals. And then all of a sudden, COVID hits, right? You're aging through this whole process, right? And then you come out of COVID, and then now there's rebuilding the supply chain disruption. Where are you going to get your product from? Building your inventories. And then you get through that, and then you're ready to go. Phones are ringing off the hook in January and February, right? We had a lot of interest, people looking to sell, and then you get almost like a dead stop. But time doesn't stop. Everybody's clicking older.
Exactly. Yeah. That baby boomer era, that generation is full of business owners. And, they're ripe for selling their businesses. But what we're seeing is they're holding on to them for too long. There's a huge disparity between ages of our client base and the buyer base. Often we're seeing sellers who own businesses in their 70s. And the buyer pool can be decades younger, 3 or 4 decades, 30, 40 years younger.
Right. And
they don't equate. There's a huge disparity in appreciation and understanding of how business is done today versus how it's been done during that owner's period of time, longevity. The Norman Rockwell era does not equate to the Banksy era, right? The technology that was available when they first went into business is completely different than the technology today. That level of understanding is very difficult to marry those two groups together. And that's our challenge. That's why we come in as M&A advisors and work with our clients to bridge that gap. because it is quite different to try to make it a meeting of the minds and produce a successful exit for our clients.
Yeah, and that's a great point, because I had this conversation with a close trusted advisor to Osage yesterday, because the due diligence process today versus 10 years ago, 5 years ago, is so much more intense. And I was talking to this consultant, and I said, you know what? I said, because the buyers are changing. The age of the buyers are changing. It's not like our peers are retiring out, and they're transitioning, like you said, to a younger generation. So this private equity fund that's been around for 30 years has got $3 billion under management, 25 portfolio companies. The generation is like in their 40s, and they have a totally different risk quotient than their mentors.
Right.
You used to shake a hand, hey, let's do a deal, send it over to the lawyers and we'll get it done, and boom. Right now it's like the due diligence. One thing I've recognized in this year is the length of due diligence and the amount of time spent, not just on the legal or the accounting, but every single aspect of your business is painstaking. And it is so frustrating.
Yeah, to add to your point, before the IOI and LOI stage, I get so many questions, and comments regarding due diligence, even before, there's a number out there to talk about. And these people, these buyers, they really want to know, so much about the business, even before they, get to meet the owner, in person for a dinner or a lunch or a management presentation.
So looking for, to Philip's point, right? I mean, because our offices are next to each other. Yeah. We'll get a deal on market, one-page profile, blind profile, doesn't say anything about the company, manufacturing company in the United States, right? That's about it.
Doesn't disclose
anything. He'll get a phone call, and then he will get ransacked with 19 different 50 questions not about disclosing the company name, about, because the one pager will show the revenues and EBITDA, well, blah, 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 supply chain and who the market is, blah, blah, who's the customer. And they were trying to almost pre-qualify whether we should sign a CA on the deal. And at some point we just put up our hands. Philip says, look, if you're interested, here's a CA, sign it, and we'll send you information.
And it overwhelms our clients when they eventually get to them, right? That request list of all the financial data, which often it's not applicable. Our clients don't necessarily measure their businesses in the way that a current generation does. They don't look at it the same way, and so you have that mental gap of someone who's owned a business for a lifetime, who's an absolute expert in what they do, and can't understand why a modern day buyer is looking for materials that they never used to run their business. So there's that gap that just continues to be out there.
Right. And who fills that gap? Us.
Exactly.
I mean, at the end of the day, we always say the transaction begins once the LOI is signed, because that's when the real work really begins, because it's overwhelming. It can be overwhelming. Again, we're in the lower market, so we don't have a team of a CEO, a president, a COO, a controller, financial analyst. They don't have a huge corporate structure. They have one or two key people, most likely, maybe a third person, and they rely on outside consultants like their CPA or their lawyer. But it really kind of falls on us to get the deal, to kind of I guess, is to keep our client focused and informed why they need this stuff. Because, what ends up happening, and I guess I just thought about this, and you've seen this too, is that somebody different. So you may have 8 different parties, business streams for due diligence. And this one party, you deliver one information to one party, and the second party requests the same thing. Drives our clients through the wall. So our job is, hey, it's in the data room. It's over here. Try to keep our client running his business or her business, and as much possible out of the nitty gritty of all this stuff, right?
the redundant requests by different advisors from the same buyer you're talking about. And to make matters worse, I mean, what we saw this year was the involvement of banks. Most of our buyers leverage the purchase price through loans and borrowing from banks or other lenders, right? And so we're seeing diligence being conducted by our buyers, as they should, right? And we get to a meeting of the minds on the contract, the terms between the buyer and the seller, and that's wonderful. But in the 11th hour, a bank might step in, especially if the debt to equity ratio is very high on debt. They want to come in and protect their investment. And they're going well beyond what I'll call a simple field examination, which might take a few days. They meet the client, they ask them a few basic questions. That's what we typically see. This year, they're conducting their own redundant due diligence that could take 3 or 4 weeks. And then they come back with new contract terms. That's something I think we've experienced this year that's very different in the marketplace, is the advent of a second layer of diligence by the lenders.
Yeah, and I think it speaks to the market for this year. I mean, it speaks to the market and the fact that, there's, with all the, uncertainty, the winds out there, raises skepticism, I wouldn't say lack of trust, but, trust but verify, right? Is like people are skeptical, and there's a higher risk quotient. So that means they're going to be, they are going to dig as deep as possible on this stuff. And I think it really extends the length of the transaction. And so what do we always say when time is what?
Never your friend.
That's right. Time is never your friend when you're doing a deal, right? Yeah. So, and things can happen. So time kills all deals. I mean, it just, we've talked about it 100 times with our clients. The preparation process. But I think to your point earlier is that what we're seeing, and you've been involved, Philip, in a number of these initial meetings, is that people walking through the door looking to sell their business, some of them are like in their mid-70s. Mm-hmm. And it's like, well, I don't know if I really need to sell, but it's like, it's trying to get them to realization that what's best for them and their family is to do a deal, because it's good. Because if you walk in today to Osage, and we're talking to several clients right now who are in their 70s, and we were to sign an agreement to move you forward, we're looking a year from now before you close. We could do it quicker, but as we said, the due diligence process, bringing all the trusted advisors on both sides together, getting things done, certain delays for various reasons. You take your eye off the ball, whether it's a family concern, whether it's you're going on vacation, in the middle of the transaction, things. It takes a year. I used to say it takes us 6 to 9 months. Now it takes up 9 months to a year, and a lot can happen during that time frame. That
environmental inventory.
Sure. Environmental inventory are two. I would say this year, to your point, the two areas of great concern with deals we worked on, mainly manufacturing, were the environmental and the inventory. And is it properly stated, and is your property clean? And we spent a lot of time talking about that with clients, that make sure you got a good physical. Maybe you need to bring a sell-side QOV, someone to double check and verify, and do phase 1. But that's an investment of time and money. And usually clients, they punt it. And when they punt it, I don't want to spend the money now. Don't think about it as spending the money. You're investing in the sale of your business. You got to change the mindset. Because if you look at it, it's part of the process to sell your business. You are going to take a lot of stress off yourself down the road, because it just extends things, and things happen. As you said, time is not your friend, right? Mm-hmm. So, it's really been a great year. I mean, in all honesty, we've had a really good year. And what I'd like to do is, Philip, Jim, have you guys come back. Let's talk about some examples of transactions we worked on a little bit, and some of the nuances that we had to deal with in these transactions. and how we were able to get them across the goal line. So if you guys would stick around, we'll come back and talk a little bit more about that. That would be great.
Sounds good.
Sounds good. All right. So, hi everybody. So, thanks for being with us today. It has been a interesting year to say the least. I'm Keith D, President of Osage Advisors. If you enjoyed this podcast, please feel free to subscribe to our YouTube channel. If you have any questions about what we talked about today, feel free to email me at kdee@osageadvisors.com. To learn more about Osage Advisors, please visit our website at osageadvisors.com, or you can pick up the phone and give me a call at 860-767-3273, extension 1001. Thanks again for being with us. Have a great day.